Dougal's portfolio had somewhere, I can't remember exactly what, it was somewhere between like 8 and 10% of my portfolio was in a company called Tal Education Group, ticker
Yep.
TAL.
Why are you gonna
Riding
do
this
this to
puppy,
yourself? Don't.
riding this
Why?
puppy
Why are you gonna
high,
do this to yourself?
riding this puppy high.
This podcast contains the arguably witty banter of two friends, Skippy and Dougals, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
I'm feeling very old and possibly out of touch, but not as old as someone who lived through the Great Depression, which is what we're going to
Oh,
talk about today, Dougals.
really?
Yeah,
I mean, mathematically, that's true. You are curmudgeon though.
very much so. Yes, very much.
So,
Yeah, I wear it
yeah,
that proudly. Yeah.
you are the Great Depression. We got a trip out east to watch Lionel Messi play in the MLS, that's Major League Soccer playoffs. So I'm excited about it. I've never seen him play live,
Yeah, as it should be.
so it'll be fun.
So I didn't think we are going here. I get to watch someone very frequently that is much younger, but might be. I'm not trying to compare anyone to the greatest of all time, but I get to watch a very talented human very often. His name is Travis Hunter. And I'll
Oh,
tell you, Dougals, that is worth the price of admission. Like, I'm so curious to talk to you next week because I walk away from those games so frequently being like, I would pay $500. My tickets are not $500, but I don't care if they were. It is so worth it to see a generational talent. I hope you have the same experience.
what's great with Travis? So Travis Hunter plays both sides for the University of Colorado Golden Buffaloes. What's great about Travis Hunter for me this season is beginning of the season, I was talking to a friend of mine, and he's like, I think he's got a shot at the Heisman.
Mm-hmm.
I came out, because I get aggressive. I came out and said 0% chance. 0% chance.
Yeah.
So then every week after football, he texts me and he says zero question mark. And I come back and I say zero exclamation point. It wasn't until after last week that I was like, ooh, okay, this has been too consistent.
100% chance.
Well, okay, now, but is that part of my belief system was the team has to be of a certain record in order for someone to be considered. I did historical research on this, by the way, because I just wanted to
Mm-hmm.
see. And now the Buffaloes are there. They're at a point where if someone's good enough, they could win the Heisman. So there we go.
Yeah, I mean, don't get me started, but
It won't.
it's like in 1946 or something, the last decent guy to play as many snaps. His team was 3-9, and he still won the Heisman. So depends on how far you go back, dude.
That's not the modern era. Okay, let's give the people what they want.
Let's stay on the curmudgeony path though.
Okay, all right.
This week I carved out some time on a whim to reread The Intelligent Investor because our
Oh,
boy Jason Zweig, who we may need to get on the show, let
probably do.
me break it down, has been doing the rounds promoting the third edition of the book. And if you've never read this book, what happens is there were three revisions of The Intelligent Investor by Benjamin Graham initially. From memory, it's like 1946, 1962, and 19, I think it's 1964 and 1972. So Jason works with the 1972 edition. Douglas is grabbing it off his shelf right there. And then Jason provides commentary of what's happening in whenever his revision happens, right? Whether that's like 2002, I think he did one in like 2014, and he just finished one in 2024.
I just wanted to
Douglas,
confirm. I just wanted to confirm
yeah.
this is the 1972 edition. This is the original. I pulled this off my shelf. This is the original that got me into the game right here that I'm holding. I've had this book
Mm-hmm.
for about 25 years ish, something
Yep.
like that. That's when I got
Yep. Yep.
started.
My first read was around that time, like maybe 20-ish years ago, right? Love the book. Think it's full of wisdom, but it's been surprising to read in 2024. So first thing is, like all the greats, whether it's Seth Klarman or Howard Marks or all these other books that we recommend all the time, every time I read or reread one of their books, I come away being surprised at how conservative the recommendations are. Douglas, we'll talk probably more about Benjamin Graham's actual text maybe next week, but Benjamin Graham will tell your typical investor to own 50% bonds, 50% stocks. If they're picking individual stocks only by like the most secure, fundamentally sound individual stock, like his requirements for 2024 are so quaint, and I say that in a good way, like so safe that the volatility that your average investor has their hair on fire with, you do not have to have that following Benjamin Graham's recommendations. And I had forgotten, like I know he's I mean, again, this guy lived through the Great Depression, made it to the other side, and built an investing career on top of that mindset. But it's incredibly, you follow his recommendations and life is easy because investing almost feels like a bank account.
What do you mean life is easy? Sitting on no returns? If I get 50% bonds, I need 150% stocks.
Yeah. Well,
I'm
okay.
just no, because you say easy, but I think what you mean is psychologically.
Psychologically easy.
But
Yes.
but if you're sitting, it's not easy from an investment return perspective necessarily. Maybe psychologically, but why don't you just put your money into a CD if that's your goal?
Oh
If you're
no.
optimizing
So
for that.
first of all, the returns of 50% stocks, 50% bonds are much better than CD. Much, much better.
Yeah, but not necessarily if you are looking for only stocks that are like the safest, securest. Because I wouldn't even describe what you do as the safest and securest.
Yeah, yeah, yeah. No, that's fair.
That's what I mean. Anyway, we don't got to get into
On
that.
top of
Continue.
that, and we'll talk more about this next week, but I mean, dude, you need to reread that first chapter. He
Okay.
basically goes off on Dougals and says, nope, that's not investing, that's speculation. Anything that's not directly tied to fundamental soundness of an equity purchase, he would classify as speculation. And I think I totally understand where he's coming from. Anyway, enlightening reread. I cannot believe, Douglas, I don't know if you've ever done this, but 20 years ago, I used to give this book to people, to novice investors as a first thing to read. And I will say now, I've grown. That is a bad idea. This is a book for your analytical,
Yep.
deep investing nerds almost to build a foundation as a financial analyst. It's not for your
Yep.
layman.
Agree with that. And I'm gonna just a rebuttal. Okay. A
Mm-hmm.
rebuttal.
Yeah.
And we don't got to get hot and heated in a debate in here. But I would say that when you take time horizon out of it, I think time horizon is really the difference between investing and speculation. If you take that out of it, it's all speculation. It doesn't matter whether you're investing in fundamentals or not, because if you're buying the cheap, you're speculating that at some point the market is going to see that value. That may not happen. It's making a bet. You can say that bet might be safer, but that's why I say time horizon is the difference.
I hear you, but I just changed one thing you're saying. I'm not criticizing your investing philosophy. I respect it greatly. Don't say take time horizon out of it. Say have a long time horizon versus short time horizon. If we're talking multiple years, 10 years, 20 years, and there's a fundamental approach, like it's investing
Yeah.
in my eyes. If it's 3 months or less, well, really a year or less, it's probably speculation.
Yeah, there you go. All right.
Okay. Here's the thing that struck me, and I actually love it, but like I've been floored. Jason's commentary, which is at the end of every chapter. So, like the original Ben Graham write up, and then oftentimes the commentary is about as long as the original write up, where Jason brings in some modern examples. It comes across, I don't know why, and this is not a bad thing. It comes across as like almost angry and frustrated. Let me give you the list of grievances, and I'm only halfway through the book so far. And then I want you to rule. I think what's happened here is Jason is really, he stayed in the same spot and the market has gone crazy. You ever seen those political graphics of someone like
Yep.
saying, I'm in the middle, and
Yep.
then the left and right both move to the far side, and they're like, now I'm not in the middle
Yep.
anymore. But I think that's what has happened in the investing space in the past decade. So Jason is mad about, I say that kind of jokingly, but he's mad about the gamification of trading stocks. He's mad about short time horizons when trading stocks. He's mad about crypto, especially Sam Bankman Fried and FTX. He should be. He's mad about leveraged ETFs. He's mad about reverse ETFs. He's mad about ETFs that trade the opposite of Jim Cramer's stock picks or some sort of Cathie Wood nonsense, whatever. He's mad about margin loans, especially in a place like Robinhood for novice investor. He's mad about alternative investments, and he walks through this criteria for alternative investments there. He basically means PE and hedge funds. And he's right. He's totally right. But the market has moved so much that for someone to, he probably said the same thing in the last edition of the book, but now hearing it today, being someone who talks about this stuff on a weekly basis for years on a podcast, it like comes across as really in your face. It's so interesting.
Does he mention taking away trading fees, like trading commissions?
Absolutely.
He does. Okay.
Yep.
Yeah. I would think that would have to fit into the same bucket because I'm curious where the line is drawn when you think about access, because like you could see, and maybe this is part of what you were alluding to, maybe not, but if you go back 35 years, whenever SPY first came out, I could see someone being like, oh, now that's going to be, but I understand because it's not about SPY necessarily, but like when the ETF started, you could see where the train could start going, where then you can have open access to the market is one thing, but if you have open access to semiconductors industry, you have open access to all these other things. I could see where someone would then be like, I don't like that. That's not what the market's about. Anyway, I think there's a line of access.
Yeah, me too. But it's hard. And generally, I think if you made him pick, I hate talking for someone else, especially someone as brilliant as Jason, but I almost think he'd say we were better off 20 years ago when you still had to pay the $5 commission, because you need these barriers to entry to protect the human brain from being hacked. And when you gamify things on Robinhood, when you take away trading fees, he has incredible stats about how frequently, that your average Robinhood user checks their account balance 7 times a day. Some of the trading that happens for your typical consumer is like 39 times a day. I mean, it's just proven that if you do any of that stuff, you lose money. And the only people that make money are the trading house.
And you didn't watch their keynote this year, correct?
No.
I did.
Why would I?
I did. I watched it. It is, I don't know if Jason watched it or not, but it is everything from what you were describing that he hates about. I mean, the whole thing was just built around the high frequency trader and how do we juice, which makes sense. This is their business model. Show me the incentives. I show you the outcomes. This is their business model. I get it. But I was watching it. All Douglas wants is the ability to download or export my daily portfolio balance. And I was hoping maybe that they came out with that feature. But no. Everything they rolled out was how do we copy and or enhance all of the features that come in other high frequency trading programs and put them into Robinhood?
Mm-hmm.
I almost cried. I mean, it really was I don't want to turn into, that complete curmudgeon or anything, but I was just like, wow. I mean, it was an aggressive push in that direction. And I don't know how you come out with that in the same year that you're releasing the IRA.
Mm-hmm.
Those two things.
I mean, they clearly want people to trade. You can buy futures contracts on the U.S. election today. I mean, it's all about, and do you know why? Because they're going to make at least a penny commission on every trade that happens. And the trades go, and you can buy one share for like 45 cents. Like they're going to make tons of money on that.
I was talking to a friend about the election. I won't go into the detail of that conversation, but I was talking to a friend about the election, and Polymarket came up right naturally as a part of that conversation. And then he was like, well, at least it's illegal to bet on the election as a US citizen. And so, okay. So we get off the phone. I kid you not, like 10 minutes later, I see the like a news article come out. Robinhood has released the ability to trade in the US. And I was like, hold on, 10 minutes ago, I was on a phone conversation where we're talking about how it's illegal. I don't actually know the law around this, but it was just like the contrast of those two things is fascinating to me.
So Interactive Brokers has it. Robinhood has it. Like it's readily available at this point.
All right. Okay.
All it is a trading house trying to make a buck. There are a few. Jason is not coming on the podcast now, just when I talk you through this hypothetical. There are a few places where there's different odds, and you could technically buy opposing sides of these contracts that one of them would fill for $1 because someone has to win. you could buy that for like 97 cents if you were crazy like Sam Bankman-Fried at Jane Street Capital trying to, hedge this. There's inefficiencies in the market here. And that goes to your polymarket point. The Wall Street Journal had a really awesome article on this guy out of France who's put
Yes.
300 million as a bet for Trump to win.
I think it's 30 million.
Oh, 30 million. But 30 million is enough to significantly move the market. The fun part about that article is they were like, for everyone else, if you kind of changed your mind, you could probably exit your stake. There's enough demand. For this guy, he really can't sell without the market completely collapsing. So he's stuck with it. And we'll find out if it's a good bet or not. I think, and sorry, this is the worst possible thing for us to chat about in the middle of breaking down the intelligent investor. So I'm just going to acknowledge that. I think what's been so interesting about the betting markets is it effectively seems like a very, very close race, like a coin flip.
Yeah, it seems
someone like Nate Silver or whoever else will say, it looks really close. And it's hard to know what people aren't saying in the surveys. In 2016, that seemed to be people were actually going to vote for Trump and they weren't saying it. Today, with suburban women especially, there might be the reverse of that, or there might be like it basically, it seems like a coin flip. And when I see betting markets that are not a coin flip, I'm like, I have no desire to bet on the thing. But it does seem like there's some inefficiencies in the betting markets, is all I'm trying to say.
And I've never seen someone corner the market by cornering themselves in the market.
Oh, I have.
Oh, you have?
Yeah.
I mean, this is a bad strategy. No matter how it turns out, the strategy's bad. Okay. Is it okay if we transfer or transition?
Not quite yet. So we just got to close the loop. So The Intelligent Investor is a great book. Absolutely. Still one of my favorites, still top 3. I'm ashamed that I used to recommend it to novice investors, but Douglas, I love read. I'll tell you, I'm going to end up with more bond holdings than I had previously. And that's a good thing, right? That's it's a rebalance for the human psyche in terms of my investing approach, the conservative nature of my investments, and truly understanding. Like, I think the underlying point through this, especially with the increased bond holdings, is you just want to be more resilient. And that's what all the brilliant financial commentators are telling you. That's what Morgan Housel is always telling you in a unique way. That's what Howard Marks is always telling you. I can't recommend it enough for the right individuals. It's really good. You should pick that thing up.
It is. That's right. Speaking of what you should pick up, that's an aggressive statement for where I'm about to go. But guess what's back, baby? Guess what's back, baby? China for-profit tutoring is back. Maybe.
Googles, really?
Maybe. It might kind of be back. All right. This is just for nostalgic purposes. Those that have been with us for a hot minute, and I mentioned it a couple times this year too, back in 2021, at the beginning of the year, give or take, Dougal's portfolio had somewhere, I can't remember exactly what, it was somewhere between like 8 and 10% of my portfolio was in a company called Tal Education Group, ticker TAL.
Why are you
riding this
puppy?
Yourself?
Don't
riding this puppy high.
Do this to yourself?
Riding this puppy high. And what happened that year was the Chinese government came out and they said for-profit tutoring, no longer okay. You cannot make a profit if you do this. And the stocks got nailed. This was 3 years ago. Hence, Reuters came out with a piece this week. They said the Chinese government, because they are trying to juice the economy again. And let me just give you a couple numbers. Before that 2021 crackdown, China's for-profit tutoring industry, according to this piece, was valued at some $100 billion. And its 3 biggest players, one of which was Tal Education Group, employed over 170,000 people. So there's 170,000 people employed. China comes out and says, no longer, you cannot do this. A lot of people were then unemployed. So China, they haven't policy-wise come out with anything, but they're trying to figure out how to juice the economy. And so they're easing. And this isn't just some random speculation. According to this piece, there were 5 Chinese parents who said this is the case. And what these Chinese parents are saying—
What, 5 of 1.5 billion? Impressive sample size here.
Don't worry about the denominator. What we're talking about is these 5 Chinese parents. And it seems like they've been going backdoor the whole time, just like in the black market tutoring
Yep.
anyway. But now there's some, as it says, gradual liberalization in recent months. All I'm saying is I'm just going to be watching tall. I have a allergy to China right now, so it'll be hard for me to get back in. But I want to watch it because I'm interested. Tal was crushing it before this happened, so I'm keeping my eye out. That's all I'm saying.
When the stock collapsed from like $90 a share to $2 a share, because the government came out and said you actually aren't allowed to have a company anymore.
Yep.
Um,
It's kind of
I
weird.
purchased some, and then I sold it at. I just looked. I sold it at $3 a share. It's currently at 11. But I will tell you, just to reaffirm, I am so happy I sold the thing. I will sacrifice those profits. Doing anything in China is basically no fun.
Mhm.
And I still own a bunch of China stocks,
You
but it's just
you
no
do. I
fun.
know.
I'm not
It's no
sure
fun.
that it's worth the amount of the reduction of my lifespan. I'm just not sure that the profits are worth the reduction of my lifespan.
Yeah, in so many ways, this is this like my psychology around this is what we talk about. That I think Tim Ferriss summarized it really well. Is you don't have to make your money back the way you lost it. And I'm going to get these numbers wrong, but roughly bought Tal around $20 a share,
Mm-hmm.
rode Tal up to $90 a share, and then circa I think around where it is right now is what ended up selling it. So
Yeah, no,
what a
that's right.
ride!
You because you sold at 10, and then that's why I bought it too. It was almost just to bother you,
Like,
just so I could have bragging
that
rights.
that's a t-shirt right there. You sold at 10 and that's why I bought it too. I love it.
It's true. Speaking of important matters, did you see the Dwayne Wade statue for the
Oh my
Miami Heat?
goodness. Boy, did I. Boy, did I. Who hasn't seen
So,
that?
well, I would hope everyone. The memes have been killing me. There's the one where he like throws the alley oop to LeBron, like the really famous picture with them in the Miami Heat, but they took the his head from the statue and put it on, and I just die. Here's my favorite one, Douglas. This feels really important to mention today. Our friends in the Ivy League at Columbia were playing Yale in football this week, and right behind their goalpost, they have a video board. So to try and distract the kicker from his field goal, they just put up a picture of the Dwayne Wade statue. Like
That's distracting.
that's
That would
how
be
bad
so
this thing
distracting.
is. This thing needs to be fixed. Uh,
I I think the closest in the memes I've seen, the closest resemblance from an accuracy perspective was when it was compared to Thanos.
you're so right. Yeah,
I mean,
you're so right.
uncanny. Except there's something about Thanos. It was like the intentionality of Thanos's design came across as strong. The unintentionality of this comes across as monstrous. Like I don't know how else to describe it.
Super scary. Not so great.
We don't talk about taxes,
Yeah, let's talk about taxes.
specifically tax deferred accounts. There was this Morningstar piece talking about the tax benefits of the IRA in the 401k. Now, let me say this right here. We're gonna say a lot of things about this. One thing I'll say is that taxes are, whether you're just talking about brokerages, you're talking about selling, you're talking about holding for a while, whatever they are. Taxes are an important consideration, not everything, but an important consideration to take into account. So I got interested in this. In this piece, the math is, I think simplicity is really helpful for understanding concepts like this. The math is so simple in here that it's incorrect, is what it is.
It's too simple.
However, directionally, I think it's an interesting anecdotal way to view this, and so I still want to talk about what the outcomes of what they did in this piece are. But let me get your take before I even jump into that.
Everyone should have a tax deferred investing account.
Absolument.
I know that sounds uh, prescriptive and rigid. I don't care. I think everyone should. You should take advantage of this. Where I maybe would push back, but I want you to talk through it, is like, I also think everyone should have a post-tax investment account. I think there's some incredible advantages that comes with that. So I don't really fight the math. I just think don't let taxes be the tail wagging the dog, right? Like if your goal is to invest, you want to invest in both spots. The tax preferred account has advantages in terms of you will pay less taxes, has disadvantages in terms of that money's not liquid for you. And so like just do both. This is all I'd say.
And I don't think that this piece was saying the opposite of that.
Yeah, yeah.
Yeah.
But when you read the numbers, you're going to read the final numbers
Yep.
of their methodology,
Yep.
and it's going to sound like, oh my goodness, I have to do the IRA, and I'm just saying, do both.
Yep. That's right. I think that's absolutely right. Here are the numbers. So there were three different accounts that they looked at for this analysis. One, so in all of these are in comparison to there's a 401k IRA, just that's static across all of these. So take that as one of the investment accounts. And then I'll say this, three different types of portfolios. It's actually more accurate that they put in the analysis for the taxable account. So just think about this as your average brokerage account. The first one is a no dividend portfolio. So just a bunch of stocks that over the course of 40 years do not pay a dividend. The reason for that is because when a stock pays a dividend, there's taxes involved. So it wanted to just look at, if you just look at pure growth and no dividends, what happens? The second one is a stock market index fund. Think about this as something like SPY, which is the S&P 500, or VTI, which I talk about. So the entire market, the reason for that is there will be in there stocks that pay dividends. So therefore, there's dividends that account here. The last is for a low turnover balanced fund. So as we were mentioning before, you got your mix of bonds, stocks, etc. The first math thing that threw me off, and tell me if I'm thinking about this wrong, but the first math thing is they said, if you put $5,000 into your IRA 401k, $5,000 goes into the account. If you put $5,000 into the normal brokerage account, the taxable brokerage account, only $3,900 goes in because of taxes. That was the first place where I was like, I think what they're trying to say is that because it's your paycheck, that if you have a 22% tax rate, if you're in that bracket, then $3,900 like is the net. But if you put $5,000 in, I just want to be very clear. If you put $5,000 into a brokerage account, $5,000 goes into the brokerage account. There's not any.
No, I know, but what they're saying, yeah, your interpretation is right, and the course language here is that didn't jump off the page to me, but you had to sacrifice. If you wanted to put $5,000 in, it'd be like 6,500. That was your pre-tax income to get to the 5,000 after tax that you could put in your account. So they just did the reverse of that to say you have 5,000 pre-tax to spend, which is roughly equivalent to 3,900 actually going into your taxable account.
However, this is where I didn't try and recreate the math. So my assumption is that the way that this impacts their later math is that if you're starting off with $5,000 that's going to compound, that's very different than starting off with $3,900 that's going to compound
Completely.
over the course of 40 years. So, and then they also tax it on the back end. That's where, I don't know. But anyway, here's how they all play out. If you compare the IRA 401k, which they treated the same, which makes sense, you're going to have 17% more money at the end of that 40 years from the no dividend portfolio, 30% more for the stock market fund, and 44% more in comparison to the low turnover balance fund. Those exact numbers will be incorrect because of all kinds of nuances. But the point here was that taxes do matter in the end, and they can matter a material amount. So be cognizant. And I think that still makes sense, independent of even the math snafus that I just mentioned.
Yeah.
I do agree that you should have both. But this is also the other way. Even if you just look within a taxable account, I think it's interesting when you look at the amount of turnover. We were talking about before, the speculation from a time horizon standpoint. If you are day trading and buying stocks and selling stocks every day, even if you're making money and taking that in-year short-term gains hit from a tax perspective, it changes. You have to beat whatever your benchmark is by so much in order for it to end up coming out ahead. That's not even what this was looking at. This was just types of accounts, but taxes just matter so much. It's important.
Yeah, completely. One quick thing, and then I think we'll get to listener mail, right?
Yep.
So just this week, Jeff Bezos sold 16 million shares of Amazon, which is roughly equivalent to $3 billion. I don't really want to talk about Jeff Bezos. I don't really want to talk about any of that. I just think it's amazing that we live in a country where sometime in the 90s, you could build a company, you could watch that company grow. Granted, you could have a ton of luck, but all of a sudden, one day in 2024, you can just be like, I think I should take out $3 billion of wealth that's been generated today. Now, granted, cut that in half after you pay taxes and everything else, but it's like amazing I personally, well, I won't even go into the Bezos piece, but like that's amazing wealth creation that we allow individuals the right to do in this country. It's amazing.
It's absolutely amazing. And also, if you look at the unusual whales like listing of transactions they have, it's amazing at how much stock he has. I mean,
Completely.
it's
Yeah.
because he has two different names. Did you look across the ledger?
No, I did not go line by line.
I
No.
assume my assumption is that there's a difference between his common stock holdings and his preferred stock holdings or something like that. Because in what he sold for the $3 billion, I don't have it pulled up, but it's something like Bezos Jeffrey is the way it's listed, and he is not checked off as a over 10% shareholder. And then later down, it has Jeffrey Bezos, and he is listed as a 10% shareholder. And so I think there's two different classes, whatever those classes might be, that he has.
Interesting.
And it's like not even so $3 billion. It's to your point, absolutely. One day you can just sell $3 billion and there it is. And you still own like that. It wasn't
Oh,
like you got out. I know
no,
he's so
it's
much
not
money,
even a material change in his
No,
wealth. Like
that's the like, that's the thing. It's kind of buck wild.
it's bizarre.
All right. Listener mail?
Listener mail, hit that jingle.
They fight and fight and fight and fight and fight. Fight, 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 fight. The Skippy and Doodle Show.
I'm just going to go right out here and say this is some of the most creative listener mail we've gotten.
Yeah, I don't know who sent this listener mail, but I want to thank them because as we've already talked about on the show, anytime I can like turn into Larry David and be grumpy
Yes.
about McDonald's menu prices, this is a dream come true. This is really what the podcast is made for.
Yeah, so this came from Adam. Here's the deal. He rolls up to McDonald's one morning to get, and I'm going to question this number, but to get, as he stated, one of 4 Egg McMuffins that he allows himself over the course of the year.
Wait. 4 is the Adam. Okay, hold on. Pause. Time out. Adam, you're allowed an Egg McMuffin whenever you want one. Buffett eats one every day, effectively.
Yeah, he's
Like,
rich.
come on. You get to eat as much McDonald's as you want on this show. All right.
There you go. You heard it here first. So he pulls up, gets his Egg McMuffin. Just a normal morning is what Adam was thinking. Then Adam looks up at the special board, and the sausage McMuffin with egg is on special, 2 for $5. And he's looking around. He goes, wait, the difference between the sausage McMuffin with egg and the Egg McMuffin is just the swap out sausage for Canadian bacon. But there's no Egg McMuffin on the promo board. What gives? So in his mentals, Adam's a solid business person. In his mentals, he says, there must be a difference in price between the two sandwiches that I just never knew about. So then he pulls up. Adam sent pictures, by the way, people. He pulls up to the regular menu, not the promo menu. Nah, both those sandwiches are $3.99. So now Adam has a quandary. Adam goes, what gives? If these two sandwiches are the same price, why is McDonald's providing one of the sandwiches, 2 for $5, and here I am having to pay a solid $4
Yeah.
for one sandwich?
$4
Here's
will
where-
break the bank.
It will.
Yeah.
Here's why I question his 4 a year. Adam was so curious. Adam goes back the next morning, talks to an employee. This is the kind of listener that we have on this show, by the way. Talks to an employee, talks to a customer to inquire what's going on here. They
Basically
have
trying
no
to
idea.
figure out if McDonald's is investable or not. I mean, on-site market research about their pricing strategy.
Exactly.
Yeah.
And this I didn't even tell you about, Skippy. Adam then listens to McDonald's last quarterly earnings.
No.
Anyway,
Okay, so
go.
sorry, question, because I think you have more details here than I have. So I spent way too much time going through the menu, looking at pricing, making sure I understood the listener mail correctly.
Yep.
The main beef here is that the sausage McMuffin with egg. No. The sausage, egg, and cheese McMuffin is available at a 2 for $5 sale.
Yep.
When theoretically it should be the same price because the single menu price of what he truly wants, which is the egg McMuffin, is $4 for the egg McMuffin and $4 for the sausage
That's right.
McMuffin with egg.
That's right. That's right.
Okay. So I'm surprisingly not as fired up as I expected to be with my Larry David hat on.
Yeah. Go.
Don't we just think that they got a deal on sausage and they're trying to peddle some sausage to get out the door? I mean, I don't think that there's a just because they start at the same common menu price, that doesn't mean that one can't go on special. But what am I missing here?
I don't think you're missing anything. I think it's a question of there are many things that could be going on. That's potentially one of them. There was a cost differential, maybe a one-time cost differential. There's over inventory. There's all kinds of things going on. The question is why? What is going on? Is the question, which we may never know. I took the lazy ride out. I took the lazy route out of this one. I went to ChatGPT and I said, "Here's my quandary." This is what I love. I first mentioned to it, I just said sausage McMuffin, didn't give the other detail. ChatGPT came out with a list of things that could be happening. I'll skip those for now. And then I said, wait, ChatGPT. It's actually the sausage McMuffin with egg. And it goes, ChatGPT says, that makes it even more interesting, exclamation point. This is why I love ChatGPT. Like, because now I'm into it. It's just talking to me. Here are the 4 things it gives.
Okay.
Higher demand for sausage-based breakfasts. So it's saying if customers prefer the sausage option, if you discount that, it can attract those who want more filling meal without reducing demand for the egg McMuffin. Okay, so there's one.
Mm-hmm.
This is also what you said. Ingredient costs and supplier contracts could be a second one. The third, menu strategy. By running a promotion on the sausage McMuffin with egg, they create a sense of value for those looking for a bigger breakfast option. This is more similar to what they said on the earnings call.
And so I was going to menu strategy in terms of a lot of times you're trying to create demand. You want people to expand their horizons, right? You know that Adam has been coming to your store for his 4 egg McMuffins a year for 20 years.
That's right.
But you're trying to get him in the store 8 times a year. So you need to sell the sausage McMuffin with egg. You need to expand his horizons.
And guess what? It worked. Because so day one, Adam says, and I don't like the sausage McMuffin. It's stupid. I would never want it. And I've never tried it. That's what he said, day one. When he went back that next morning to do the additional research, guess what he bought?
Pick it up. Yep.
There it is.
Okay.
And guess what he said?
Hold on. Did he buy the 2 for $5 and give one to a homeless guy on the street? Or did he pay $4 for that bad boy?
I'll have to look this up. Because I think he mixed and matched a little bit. I'm pretty sure he mixed and matched a little bit. There were no homeless people involved, though. I can tell you that much. He consumed everything that was purchased. The last one here is testing product mix. So running localized or time-limited promotions to see what resonates. Makes perfect sense. So that's what ChatGPT came back with, and I appreciate it. That's it.
So I hesitate to do this. Yeah, I'll save it for another show. At some point, maybe at episode 400, I'm going to reveal the best McDonald's breakfast order you could possibly make.
Oh, wow.
But not today. Not today.
No, maybe that's a premium episode.
It's better than Adam's. I'll tell you that much. All right, folks. Speaking of premium, you can hit skippydoogles.supercast.com to help support the show with a monthly subscription or a premium subscription to get more info. You can find all other things for the show, including write-ups of what we talk about each week and pictures of the Dwayne Wade statue, which is hilarious, on skippydoogles.com. Listener mail, if you're like Adam and need us to break down your breakfast order, is skippydoogles.com. Thanks, guys.
Thank you.